Hello, and welcome to the Crypto Beat. My name is Kelvin Sparks. I'm a co-host here at the block. And joining me today, we have Canekeratne. He's a senior associate at CoinFund. And welcome to the show. How's it going, Cavan?
Hey, thank you guys so much for having me. It's a pleasure to be here and doing great.
Nice. So before we get started, just wanted to make a quick note that if you're hiring crypto, you should use Campus. Out of all your candidates, it'll help you pick out the real crypto natives. Head to theblock.co/campus to get a 3-month free trial. Now, let's move on to today's episode. That being said, Tim, I know you had a bunch of big ones you want to do to kick off the episode. I'll hand the floor over to you.
Sure thing. So big news today. Trump is going to sign an executive order today, apparently, to allow crypto and other things such as private equity to be included in 401ks. Do you think this will result in much more exposure from pensions, or do you think the reality might be maybe less so than the excitement might lead you to believe?
I think in crypto, we always get a little bit ahead of ourselves. I was doing some research earlier, and something like 2% of people have self-managed 401ks. I think that's the first group that will be excited about this and actually adopt it. Over time, I think this is a great chance for Bitcoin and maybe other digital assets to make it into ETFs. And when that happens, it'll be eligible for more of the broader population on 401ks. But until then, I think it'll be that small group of people that's willing to adopt it. But 401ks are a great place for Bitcoin because, the issue people have is panic selling, right? So if you're going to buy this and hold it for many, many years, I think that's exactly what should be happening. And I think in the long run, it will be a great boost to the industry.
Cool. And what do you think of SEC's Project Crypto? I noticed Bitwise CEO Matt Hoogan said it was the most bullish document he's read for crypto. And he was surprised at that for any document, for it to be an SEC document as opposed to coming from any other source.
I totally agree. I'm only about 60 pages through, but the thoughtfulness in this document really, really impressed me. They took the time to go deep on protocols. They have examples from Uniswap, Ondo, a ton of protocols that I wouldn't have thought were on their radar. I mean, Uniswap is on everybody's radar, but a lot of smaller ones, even Plume is mentioned in there. So it's really bullish, I think, for the industry. For a long time, the US was behind, right? We were just essentially shadow banning crypto and letting innovation go somewhere else. One of the things that enabled the US to become one of the most powerful countries in the world is our access to capital markets. And bringing crypto capital markets to the US, I think, is the next evolution of this, is something that's going to further the US's stronghold around the world. So I'm really excited about this point as a crypto investor.
Well, 60 pages deep is definitely more than some of us. Yeah, SEC after that then said that liquid staking is outside of securities laws, with some caveats, I'm sure. Is it good to see sort of more clarity over, I guess, the things that are kind of more innovative in crypto? Because I think for a long time, they were struggling to deal with the basics, let alone Pendle split yield tokens and stuff like that. So is it good to see them getting a little bit more in the weeds?
I think so. I mean, I was really worried that they would make a lot of tight regulation without fully understanding the underlying technology and how these assets work. Previously, I know people who went to go speak to the SEC and were kind of appalled at their low level of understanding. In the last 10 months, they've done a lot of homework. And for them to get to this point on liquid staking tokens is tremendous, because if it's an ETH liquid staking token, right? Ethereum is not a security. Why would the liquid staking token be a security if it's just wrapped ETH? I don't think it should be. And I'm sure there should be some qualifiers. Just because you make anything in a liquid staking token doesn't mean that it's automatically not a security. But I'm really happy to see that, and that they're getting in the weeds.
Cool. And then the other big news yesterday was that Roman Storm was found guilty on a charge of operating an unlicensed money transmitter. However, the jury did not come to a conclusion on the money laundering charge and another related to sanctions. Do you think this was a fair result?
I think it's close to being fair. I mean, I wish that he would just get acquitted, but it's really a tough spot because they're essentially saying if you put out code and people do nefarious things with your code, then that's not your fault. That's what the crypto industry wants to see happen. But then that doesn't incentivize people to put out thoughtful regulations into their code, and maybe not regulations is the right term, constrictions on what people can do with it. So there has to be some kind of balance. I definitely don't think he should be guilty of the more aggressive charges. I would love for him to be acquitted, like I was saying, but it's a tough spot for for regulators. And I think even if you look at Project Crypto, where decentralization fits in is kind of an unknown. There's not really a stance, and I don't know how you regulate things that are decentralized. So that's something that's going to be a many-year process, and this is unfortunately part of figuring it out. But I hope that whatever penalties are levied are pretty light, because I don't think he intentionally did anything wrong.
Understood. Yeah, thank you for that. I guess segueing a bit, one of the things that I was most interested to talk to you about was the perp. And we've seen an explosion in just perps notional volumes traded on centralized exchanges. I mean, 6 of the top 10 months for notional perps volume traded have occurred just this year alone. And in December, there was a record 7 trillion in notional volume traded. So I guess why are we seeing such an explosion in the popularity of this specific crypto product?
Yeah, it's awesome. I honestly think it has to do with the user experience. Like a lot of what a lot of people don't talk about for Hyperliquid is like, yeah, the token went to the right, but before that platform was out, they had like the best perps platform. That's why everybody was using it. So they had a bunch of power users for like, this is the best place for me to trade perps. And the reason for that is the UX, a lot of people say was like Binance, right? Like it's like a centralized experience in a decentralized manner. So you get kind of the best of both worlds. And I think we're just seeing that happen more and more. Like now Coinbase is trying to figure out how they can offer perps to their users right in the US, and the US regulators, I think, are making that a little bit easier. So for a long time, like a lot of things in crypto, I think it was a UX problem. And we finally got to the state where like the UX is good enough. And also there's more sophisticated capital coming in as regulation becomes clear. So it's kind of like the combination of both of these things, but it's really cool to see it playing out on decentralized exchanges. Like I think the DEX to SEX volume is at all-time highs. It was like 25 or 30% the last time I looked at it, which is like by far and away higher than it's been historically. So it's great to see that people are coming into the space in a more sophisticated manner, and then also gain the benefit of like truly on-chain technology.
And it's interesting. You touched on it a bit. I mean, I definitely do, like, I'm more or less an on-chain maxi myself, but I guess I'm curious now, at least it seems like the exchange game is changing a lot. You have a lot of exchanges fighting for this this retail bid, if you will. And how do you think that changes with a lot of these new, like, more structured products that they're offering? I mean, Coinbase offering commodities. They're now trying to expand perps, as you mentioned. Even Robinhood aggressively moving into the crypto game. Just how do you think that plays out for exchanges in the end?
Yeah, I mean, it's interesting because I feel like a lot of people are fighting for the same users. Like before, I feel like a lot of people probably traded crypto on Coinbase and then their stocks on Robinhood, right? And like, you could name another fintech app, but now they're all adding the same things. And I think it's going to be a multi-year process. We kind of saw this playing out in Europe. Maybe they're like a little bit ahead where like these apps have consolidated and become super apps. And I think that's kind of like everybody's thesis in the space because you're really focused on share of wallet. And at the end of the day, that's going to come down like to user experience, in my opinion. Like Robinhood really pioneered like the great like mobile user experience, and they've been crushing it. But I think Coinbase took from that. I think some like other apps like Revolut have taken from that. And it's going to be a little bit of a slog for people to figure out like, hey, what are the unique products that we can offer that are going to bring people to our exchange? But as an investor and for people who are building in the space, that's super, super exciting because hopefully like some of the things that we invest in will be those products.
One thing I wondered about with sort of tokenized stocks is, will crypto investors take to them in the same way they've taken to tokens? Because it's like, sure, you sort of put it on a chain and now it's sort of easier maybe to trade, and maybe eventually you can sort of trade them on Hyperliquid or something. But does it make it any more interesting to trade? Like, because they're not typically as volatile as a lot of crypto tokens. They're sort of understood very differently from a valuation point of view. Although that said, you have a bunch of them like Tesla that sort of almost trade as meme coins in a way. So what do you think will be the pull if they sort of come onto crypto rails?
This is a great question. I think that I'm probably the most bullish person on tokenized stocks inside of CoinFund, but I have a little bit of a nuanced view here. So like in the US, I actually don't expect adoption to be that high. Like if you have a Coinbase account and you're actively trading tokens, you probably have a brokerage where you're actively trading stocks, right? Or you do your stock trading there. And maybe there's a little bit of a pull of like, okay, now I can exit my ETH or my Bitcoin and convert that to Tesla. Like that might be a use case for a few people. But if you look at stablecoin adoption, like the driver of that was actually emerging markets originally and people who wanted to get onto crypto. And in places like Latin America, Southeast Asia, people don't have access to US equity, which is a huge part of the world. And those people, I think, are going to be the first adopters of tokenized stocks because it's going to be the only way they can get them. Those countries are too slow to regulate and like stop it from happening until it's kind of like out of the box, which is exactly what happened with stablecoins. So I'm really excited about the potential for tokenized stocks to reach like to take the US capital markets to other geographies and give them their first exposure to it.
So that's actually really an interesting point that you bring up because I believe it was treasury debt and private credit actually make up 80% of the RWA market. So that being said, I mean, it's like roughly like a $20 billion number that you put on if you exclude like fiat-backed stable coins. Do you think that the tokenized stocks are going to outpace this growth potentially?
I think over the next couple of years, it'll be one of the highest growth segments. I think there's only about 400 million of tokenized stocks right now, right? So it's like a drop in the bucket. The most of that 20 billion number, I'm pretty sure, is the mortgages that Figure has put on chain, and they just filed for IPO. I think that's awesome that they're doing this. But I wouldn't be surprised if in like 5 years that tokenized stocks are, like 20% of this market instead of being like less than 5 or whatever it is. Because I can just really see that taking off like around the world. If you put these in like the Latin American crypto exchanges, right? Like those people don't have access to US stocks. They would be all over, in my opinion.
How do you think they'll solve the issue in terms of the ownership? Because obviously there was that when Robinhood launched their stocks, OpenAI said, we haven't approved the sale of this equity to, these people or whatever. Like, how do you think that gets solved?
I think for private companies, it's much more difficult. And like, honestly, I'm not a proponent of private companies trading like super liquid. Like that was Carter's original vision, which they like kind of famously wound down last year. Like Henry Ward had a huge post about it. It's very, very hard, like mechanically to set that up. And also like these things, they're not reporting like, what's driving the price difference from one day to another. You have no idea. Most of the time you hear about their metrics in between fundraisers, right? Which is between like 6 months and 2 years. But for equities, I think the regulation could be a little bit easier. Like that, if it's a Latin American exchange, maybe they just have to have a bank account in America where they custody that stock, right? And if somebody wants to buy it, they can buy into their share of that pool. And that's it. I think that it's like much more doable from a regulatory standpoint. The private shares, I mean, whether they're tokenized or not, making private markets more liquid is a huge regulatory burden that I don't know how that gets resolved.
It's interesting actually seeing all these new types of like structured products, the liquidity they bring in, the new market participants. But one of the things that I'm always cautious of is with this Lego money, like where's their leverage going to build up in the system? And is it going to occur in like ways that are not obvious to most investors? So I'm kind of curious, do you see any pockets of leverage building out currently or any things that like may worry you a bit?
I'm definitely not like the expert on leverage. I can't say that I've seen anything that's like super, super concerning, like where we are right now. But that being said, you like never see these things happening until the bubble bursts, right? Like I've recently started thinking, or I listened to Jamie Dimon recently on his Acquired interview, and he said whenever there's new financial innovation, it always leads to a bubble, right? There was like mortgage-backed securities. Before that, there was bond trading when it became like super liquid. The equities back in like 1930 was another example he gave. And I think at some point, there's probably going to be an issue with stablecoins. I don't know exactly what that is, but that's where I'd be paying attention because it's also what's driving the adoption. And the regulation, like it's coming, but it's a little bit, I would say, loose. Like, I don't know if I would call Athena a stablecoin person. You know what I mean? I think it's like a very cool product. But I don't think that like I would refer to that as like a stablecoin. It's like not necessarily stable. So those are the things that I think could lead to it, but there's not a pocket that I could point to right now and be like, oh man, there's too much leverage here.
Yeah, it's interesting. I was in, well, not their offices. I think it was the Aave offices with the Athena guys. And I was sort of telling them almost, there's an argument that the idea that it should be more split into a vault product and a stable coin that's backed by the assets in that product. Because I think that if you had that separate, you can almost have, in theory, you could have one fail without the other. Like the stablecoin could fail without the vault product failing, but the fact they've merged the two together, I think makes it more complicated and a little bit harder to understand the risks involved. Yeah, that was kind of my take on that.
No, I think that's a really, really good take about it. But at the same time, like I think that the current product it's a great structured product, right? Like they've tokenized the basis trade and let anybody go and be capital efficient, like go use it, like borrow against it in DeFi and things like that. That's tremendous. They should keep it the way it is. I just don't know if I would call it a stable coin. I think that they could probably add like a more traditional stable coin to their ecosystem potentially one day. Maybe that's on their roadmap, who knows? But I just think like the labeling of these things is something that crypto should be careful about as we scale, right? Like it was much worse with people like BlockFi and Celsius, where you thought you were getting yield from something and then they were investing in like venture capital companies. Athena is not doing stuff like that. But I think that given these things have happened, we should be very, very clear about the risk that you're taking when you enter into a structured product, because most people have no idea, in my opinion.
Yeah, it is interesting to see how stablecoins have become such big business. Like, I mean, for Aave, it was Mark Zello who keeps making the point that Go makes more money for them than people lending on Aave in terms of sort of dollar for dollar amounts. Yeah, it's interesting that competition heating up so much, both sort of for the centralized options, but also the decentralized ones.
I mean, it's really a tremendous business, right? We're seeing with Tether is like one of the most profitable companies in the world, period. It's amazing. I think when interest rates are a little bit lower, then you have to figure out other ways to make your business be successful, and stablecoins won't be quite as profitable. But it's an awesome innovation for the space. And it's kind of funny because it's like so simple, but that's part of the beauty of it because anybody can understand. Like, I really believe that's a big part of the TradFi interest is now there's a use case they can point to where they're like, I get this. Like, this makes payments more frictionless. It makes them cheaper. It makes money movement simpler. And that's a big part of like why they're coming into the space now along with regulation.
Yeah, I mean, there are risks, I guess. I mean, I just remember I briefly saw earlier, I think Paxos, reached a $48.5 million settlement with New York over like them working with Binance on their stablecoin. So I guess, there's risks involved, but I'm sure the upside is worth it.
Yeah, I think that stablecoin, it was like 2 years ago or something it got wound down, right? Because the reporting on it was like not very clear, which I'm kind of glad that it happened that way. It's much better than like if they let it keep going and then for some reason that led to a bubble and it popped.
Yeah. What I thought was fascinating with that stablecoin, it didn't really come to pass, but the way they did it was they wound down half of the peg operation. So it was like if it went above peg, they withdrew the mechanism to bring it down to peg. But if it went below peg, that was still the mechanism to bring it up to peg. So I always thought there was a potential it just went above $1 and was almost like $1 minimum stablecoin because it had this one-sided peg structure because they were blocked from doing half of the peg. So I always thought there was a chance it could have just like become like free floating, but I don't think it ever seemed to happen.
That's super interesting. I wasn't aware that's how their mechanism worked.
Well, I mean, they have both mechanisms, but it was the regulators that shut down half of the mechanism.
Which is
like, I can't remember if it was withdrawals or deposits. It was one of them, but not the other. So, like, yeah, I thought that was potentially interesting.
That was the last regime, right? I mean, that's kind of like a perfect example. I definitely don't think you should go in and tell somebody that they should stop operating half their stablecoin, like or half their peg mechanism. I don't think that the current one would do that.
Yeah, we were chatting about tokenized equities, but tokenized RWAs have hit $8 billion on Ethereum so far this year. What do you think is next for that sector?
I think that it's really kind of just in the early innings. My first VC in crypto was Draper Dragon, and I was begging them to invest in RWAs in like 2023 because it just makes sense. Like you save a lot of costs, right? You make the accounting much, much easier for people. And I think that we're going to continue seeing like what happened with like Apollo's ACRED and some of these other funds that have come on. Like they're going to pick to tokenize these things just because it makes managing their LPs easier. And then the next step of that is now LPs can get more flexibility, right? Like typically you invest in a private credit fund and that money sits there for like 2 to 5 years. There's nothing you can do with it. Now you could actually sell it at the market price if you want to, right? Like there might be a buyer. You could go borrow against it if it's like collateral at DeFi. So I think that we're just going to see the uptake continue because it's going to provide more flexibility for the investors in those funds.
Sure. And then Ethereum mainnet activity has been rapidly rising over the last few months. We did a data story on this very recently. The chart's looking very positive. Any thoughts on what's behind that?
So I think that the market went way too bearish on Ethereum. If you look at it going back for 2 years, the transactions have been very, very steady. It was in a band of like 30 to 35 million for all of 2024. And now this year we've gone from like 35 to like 42 million or whatever it is, like per month, right? And this never really changed. The issue was last year during the Shanghai upgrade, they didn't communicate that reducing the blob fees was going to really hurt their revenue. It got cut into like a fifth. And that really bothered people when it happened, even though that's what's enabled all of this uptake from the L2s. So I think the market was being a little too short term. Ethereum was executing. They didn't communicate very well. And it's still not super clear, like, how much they're prioritizing L2 growth versus like mainnet Ethereum growth. I think they're still figuring it out. But the technological changes they've made really enabled this. And now, if you look like where DeFi is, it's always been on Ethereum and it continues to be there. And Base and some of the other L2s are actually having as much usage as Solana now. So I think that they've done a great job. The FUD was a little too strong, and I'm really glad to see that it's turned around and people are believing in it because that's where most of the stablecoins are in crypto. That's where most of the private credit has been locked up, as you mentioned, right? And I mean, I'm not an ETH maxi, but that is what made me understand crypto. And I'm really happy to see that it's getting the credit it deserves.
Yeah, it was really interesting that it was like 2021 at the end of the last bull cycle when I just remember how unbelievably bullish everyone was on ETH. Like it was across the board. Everyone wanted it. And then just suddenly, or I guess actually more slowly, that just got sapped out of everyone. And then eventually sort of it hit peak despair, everyone losing faith in it. And then I guess that has reversed this year. And I think I noticed today on the timeline, someone just had like a super bullish ETH tweet. I think it was just like saying they don't own enough ETH. And it was like, I haven't seen that for about 3 or 4 years. But yeah, I mean, maybe the momentum's back. Obviously, like Solana took a lot of the momentum for like the last few years. So I guess maybe ETH is sort of, can it start competing again?
So this is what I think was overblown. Yes, Solana had a lot of momentum, and they did have like more protocol revenue than Ethereum, right? But what was driving that protocol revenue was meme trading, and even Anatoly like doesn't love meme trading. He doesn't want that to be what's like driving all the activity on Solana. I think he said that publicly recently. So I think Solana is doing great. I see both of them winning. When new people come into crypto, like I feel like I tell them the ecosystem you should pay attention to are Ethereum and Solana, and then obviously you should have Bitcoin, right? But I think both of them are going to continue doing super, super well. And I see them winning together. But Ethereum, I think they have been doing pretty well this whole time. It was just not properly communicated.
Yeah, I do think meme coins trading is a big part of it, but I do think there was a lot more of it than that. Like, I think with the speed and the UX of a lot of Solana platforms, it just felt like anytime you just were using something, it was so much easier. I mean, you had the like one-click approvals instead of two-click on Ethereum, and that's a basic thing, but it kind of builds up. But like, especially lots of like really buzzing NFT communities, and even the DeFi stuff on Solana, it did the same thing as on ETH, but it just felt it was way cheaper, was a big thing. And it was just faster. Obviously, there were times when they had issues and it was getting spammed, things like that. But I do think where I think ETH has become more competitive is on the layer 2 side of things. Like around that time, the ETH layer 2s were quite early. I think now you're starting to see quite popular ETH layer 2s. I mean, Base has done an incredible job at capturing a huge amount of attention and getting people using their chain. Obviously, sort of integrations with Coinbase helps. But I think the layer 2s are just getting better. And I think interoperability is a bit better between them. And I think that's helping ETH compete with Solana, because now they can sort of say, okay, well, actually, our speeds are sort of similar, our fees are sort of similar, and try and bring, and I think they have brought some of those people back, but definitely a lot of people now use both.
I totally agree. What's really important, what you said there to me, is the user experience. Like when I first came into crypto in 2022, I would get into arguments with my old partners being like, we can't invest in this. It takes 15 clicks to do anything. Like that's not working for the most of people. And back then we didn't have enough tech to like dedupe wallets, right? So we thought there was like 20, 30, 40 million people in DeFi when the real number was probably like sub 5 million. Like now, I think there's significantly more people in DeFi trading meme coins, doing whatever, because the UX is really improved, right? I think Phantom is a big part of that. I think Base Chain is a big part of that. And like the next wave of crypto is going to be driven by people making this tech actually usable for like everyday people, hopefully giving them a benefit that they wouldn't otherwise have had. And that makes me very, very excited. So I hope we keep seeing crypto UX getting better. And the L2s are a huge part of that for Ethereum.
Yeah. One thing I also saw now was a post from Vitalik yesterday where he said essentially that we should sort of move from optimistic rollups to ZK rollups. So I think the main thing was about withdrawal times. Like on optimistic chains, it can be like a week. And he's like, that's got to be much faster, and sort of suggested a move to ZK rollups. I think that's interesting because most of I guess the most used rollups right now are optimistic ones. I'd say Base is probably the biggest, and then maybe Optimism, I'd guess, a second. Arbitrum's obviously had a big revival recently with their Robinhood deal, and sort of coming back a bit. But numbers wise, I think Base and Optimism at the top. So how do you think that's going to, I guess, affect it if there is this shift to ZK chains? Will it be chains like Base and Optimism changing their tech and adding ZK features, or will it be a move to chains that are ZK based right now, like ZK Sync or whatever?
Well, at CoinFund, we hope it's ZK Sync. We very actively back them. But I think it's going to be a little bit of both. I think Sync just TG'd, and like their product is actually like to be plug and play for people like Optimism and Base to be able to incorporate ZK proofs right into their platform, which I think it's going to be kind of a mix of both. For institutions and like high frequency trading cases, I do think that ZK tech is better. And like that's like the end state, right? I think that's what Vitalik is talking about. But what people maybe didn't realize at first, and like the guys like Optimus and Arbitrum got right, is you can do a lot of stuff with optimistic rollups. If you go on L2 bead, Base typically has the highest like realized TPS of anybody that's out there today, just like on a daily basis, right? Not like at peak times, but just like on average. And that shows you can do a ton of things with optimistic rollups. So I think it'll be kind of like a slow transition until there's like a really, really great and usable ZK use case. And probably institutions will be the first to adopt that. And then like those things will become more prominent, but it's probably going to take a while to play out. If you look at the actual like amount of ZK proofs that have been written on chain, that number has unfortunately been declining since 2024.
Sure. And back on
So
Solana, any thoughts on the rivalry between Pump.Fun and Let's Bonk? Like, seems to be very, very strong, intense competition.
Yeah, I mean, I wonder who's actually trading meme coins right now. I have a feeling that it's just like sniping bots playing against each other. So they're just going like wherever there's better incentives. But I think the rivalry is interesting. It's fun for crypto. I It's a good and a bad thing. A lot of my TradFi friends, the last like year and a half, the first thing they ask me about in crypto is like, which meme coin should I buy? Hey, I saw this meme coin. Like, what do you think about it? I'm like, do you own any Ethereum and Solana? Like, please tell me you own 10 times more of that than whatever you're putting into this meme coin, you know? Which is usually not the case. So I'm glad that it's bringing people into crypto. I hope that it brings in people to stay as opposed to like the NFT bubble that brought in a lot of people that since left crypto, right? And that's bad for the space. So it needs to be kind of in both. I think that it's awesome innovation showing like internet capital markets and how quickly capital can be formed, not only in like launching meme coins, but how Pump Fund did their raise, like super, super impressive, kind of shows the value prop of the blockchain, right? But I hope that those things are taken up with other use cases that are maybe more sustainable and like not only bull market activity.
So I can confirm it's not all just bots trading. I'm in there in the order books a little bit.
What have you been buying recently?
On the dexes? I'll tell you that after the show.
Fair, fair.
But I guess one of the things that I was interested in at least was like, at least specifically the launchpad wars between those two, and even the interest of Binance with like 4Meme doing the same launchpad thing is once you have that like that core infrastructure get commoditized, you're gonna see value either move further up or further down the stack. So I'm kind of curious, actually, where do you think that value moves that now that really Pump Fund's core business model is already being done at least 1 to 2 other places, if not actually even more via like Jupiter, Moonshot, all these other places. So just, yeah, where do you think the value moves?
I think that the actual act of trading meme coins, right? It's like very interesting. It's fun. It's very akin to gambling, but there's cool things that come with it because there's so much liquidity that comes into the system. So I saw this company earlier this year where they did like a product launch platform where you could design a product, tie a meme coin to it, and then how this product gets launched is based on the interest in the meme coin. So if it gets traded enough and it hits like 100K market cap, you can make like, a couple test runs of your product. If it gets to a 500K market cap, now you can ship like the first 30 units. And they siphon off liquidity that's being traded to fulfill the orders for these units. So they're using that activity to drive like actual utility, which I think is very, very interesting. And I think we're going to keep seeing more things like that come out of meme coin trading.
Yeah,
back to
definitely
Bitcoin,
seen a few
I guess.
examples like Storefund and whatnot. Sorry, I was just gonna say I
Go
saw
on,
like
go on,
things
Kelvin.
like Store.fund as well as what was the other one? I think Dripster was the other one. Accelerate.
Dripster's the one I was talking about.
Yeah. Oh, it's a really, really cool business model. I mean, I worked on projects previously that tried to do this actually via NFTs, but to your point, that almost like that secondaries value just don't really capture via, at least at the time, it was like 721 standard, or even 1155 tokens on Ethereum. So really cool to see how Solana kind of like is actively trying to crack that code.
Totally. Although, if you've seen Linksdao turned their NFT launch into actually buying a golf course now. Like a lot of people don't talk about it, they stop paying attention to it because like most people don't care about NFTs anymore. But a few people used that and actually fulfilled their promises. I think the bigger problem with NFTs was there was a lot of promises that weren't like seen through, and people like rug their communities. And that's really bad. There's a bad taste in everybody's mouth. So both of these technologies, I think, will come back. They just like back then, everyone was saying like NFTs are everything. We're going to put everything into an NFT, right? Obviously, that's not how it played out. I think meme coins are kind of at that part of the cycle now, but there's always going to be use for them.
Yeah, I thought Linksdale was interesting because I was like, why is everyone sort of all over the world collectively buying access to a golf course that presumably is only in one location? Maybe they have more, but like, yeah, I never quite understood the logic. I know like Dudas was heavily involved, but
I actually didn't know he was involved till like much after I've been following the project, which is funny. But the one thing they got right is before they bought the golf course, they gave perks kind of like the icon pass, like for skiers, to the NFT holders. So there were certain golf courses all around the country where you could go and get a discounted rate, or maybe a course you couldn't have played otherwise, but you had like some privileges because you had a Linksdao membership. And that was the value they were providing until they had enough money to go buy a golf course. And now you get both of these things. And that's something I think was really cool that they did.
Have you been checking out Zora at all?
A little bit. I mean, I definitely see how much Coinbase has been shilling it. I think that, like, do I think that everything needs to be tokenized? Like, in that sense, no. But I do think something cool will come out of it. Like, I think Jesse had a tweet recently. It was like, somebody's going to do like a 5 million creator fund and it's going to be all Zora tokens now and do well. I mean, I don't know how sustainable that will be. I think at some point in time, it could do well. But I do think the creator economy is here to stay, and finding ways for creators to engage and like extract value from their fans, not extract value, but capture value from their fans is the right way, right? Because they are providing like value to them. That's why people spend time watching their content and consuming it. So I'm excited by this. I don't know if I'm like super bullish on the idea of like tokenize everything. But I think with the shot on goal they're taking with Zora is awesome, and I appreciate the experimentation.
And then back to Bitcoin. Today there was a story that they'd raised $9.5 million. Do you still think, or do you think Bitcoin DeFi is still a growing trend? Because it was had a lot of hype for a while, and I think people have maybe moved on a little bit. But do you still think it's something to keep an eye on?
I definitely think it's something to keep an eye on. I think people in CoinFund are probably tired of hearing me talk about it. I've been following it when ordinals happened in 2023. I was like, oh my gosh, like there's got to be Bitcoin development. And this makes a ton of sense because 60% of Bitcoin hasn't moved in over 4 years. People are doing nothing with it, right? Like that's a lot of latent capital that could be accessed. I don't imagine that all 60% of that is going to come out and be used, right? But if you can even just get like 5-10% of the total Bitcoin market cap, that's like a massive component of DeFi. I think actually would be like greater than all of DeFi today if we get to 20%. So like how do I see that playing out? There needs to be better source of yield. Part of the reason I think that the Bitcoin DeFi narrative has fallen away is the Babylon yield is terrible. It's like between like 0.5 and 2%, depending on like what strategy you're doing with them. And that's not enough to get people to go through the hassle of bridging their Bitcoin and then depositing and taking smart contract risk. I do think the first adopters are going to be like the people who hold Bitcoin on a SEX. And like, by the way, I think most people who come into crypto, the first thing they do is set up a centralized exchange account and buy some Bitcoin, right? And now maybe it's buy the Bitcoin ETF, which won't affect this. But hopefully there can be some products. I think Coinbase has done a really good job working on this, like with CBBTC, that capture some of the exchange Bitcoin, put it to work in DeFi. I think the second leg of that is going to be all the treasury companies that are buying all this Bitcoin. Like, I mean, I hope Bitcoin continues on its CAGR for the next 15 years. Personally, I think that's unlikely. I think the CAGR is likely to reduce a little bit over time. And as that happens, you're going to have to put Bitcoin to work to like rationalize having it on your balance sheet. So I think that those two use cases will drive Bitcoin DeFi going forward. But it's probably going to take like a little while longer to play out than I had previously thought, and like maybe people thought in 2024.
And as for Bitcoin treasury companies, I just noticed like we've been tracking them super closely. We've built out a whole dashboard for both, well, for Bitcoin treasury companies, ETH, Solana, and then also crypto with all of them on one dashboard. And one chart that I think is really important is the total market cap of Bitcoin treasury companies. So it's like if you take all the market caps for each of the companies that are buying the Bitcoin, putting that all together, you're going to, if there is this sort of massive boom and bust, you'll see that playing out on this chart. I noticed that is down $20 billion. It's sort of like kind of peaked and come over the top. Do you think this is like a peak or just like a little bump in the road and there's way more for it to grow? Like, what do you think on the trend of DATs, I guess, as they're now called?
Yeah, I mean, I think if you go back to like why DATs even became a thing, it's because previously like hedge funds and mutual funds, they couldn't buy Bitcoin and they couldn't even buy the Bitcoin ETF when it came out because it didn't have long enough of a track record. So what were they doing? Buying MicroStrategy because it was the first most prominent DAT. And I think it's going to remain to be the case. I think that right now we're definitely seeing a little bit of froth in the market. I mean, people are pinging me left and right about DATs, specifically a lot of venture funds, which I think is pretty interesting. At CoinFund, we don't put them in our venture funds. But I think that there is a place for them and it's awesome that it's bringing new capital into the space, but I don't think we need like so many DATs. And I'm curious to see how it plays out. I'm sure like, that total market cap, right? Like that's at a premium, like maybe close to a 2x premium of all the underlying Bitcoin, which with how easy it is to access Bitcoin today, I don't know why people would pay $2 for $1 of Bitcoin.
I mean, so I had the Apexi guys explain it and they said that essentially, yes, you're paying like $1 for $0.50 worth of Bitcoin, but you're assuming that more people will come in behind you. And then with the yield, you'll eventually have more than $1 worth of Bitcoin for your dollar. So sort of each sort of wave of people coming in relies on a bigger wave of people coming in. And like sort of, if that's my understanding, that's why I'm sort of so concerned about it.
If that's how they describe it, that's very conservative to me because you just described like an MLM.
Yeah.
So that's one side of it. I don't know if you saw Athena's post about like Gavin from Athena's post about digital asset treasury companies. Like there are some assets that will like for a very long time not be available in the public markets. Like Athena is most likely one of them. There was recently a BNB DAT, right? Like I don't think that BNB is going to get its own ETF anytime soon. So giving public markets investors access to BNB and like access to Athena and some of these other ones, like, I think that's interesting. You've essentially hacked your way to your own ETF because the SEC has been way too slow to regulate these. And even like on Ethereum and Solana, the current regulations, if it goes through for the staking ETF, only 50% of the assets will be eligible to be staked. So like, are you going to pay extra fees for your Ethereum staking ETF to give you 1.5% of yield? I don't think so. But if you buy something like SBET or Bitmine, like those people believe they can actually generate yield in excess of the ETH ETF, or excess of the base staking rate, right? By doing activities in DeFi. And I think that's more interesting. I still don't think that you should pay like $2 for that, but I think that people will buy it at NAV for that exposure. And like long term, I believe that those ones provide that kind of value add will survive. And then like these people who are just pivoting because their company does nothing else and buying Bitcoin on the balance sheet, like I don't really think that's going to end very well.
It's interesting you think about like the smaller companies, if anything, are more attractive than the bigger ones, the ones that don't have EDFs. We've collected the data on like the high treasuries, Litecoin treasuries and stuff. We haven't got the charts yet because it's quite small numbers, but there's definitely quite a few of them in developments. I also noticed like Standard Chartered said ETH treasury companies are very investable and argued they're more investable than spot ETH ETFs.
I think so
it's
because
very
of the yield,
peculiar landscape,
right? Like if you're going to hold Ethereum for a long time, like why would you not want to participate in the staking? And I think that that's going to like for a while, I think that was actually hurting the uptick of the ETF because like a lot of people who bought this ETF were probably people in crypto, like the first wave, right? It's just like another way to do it, like double down, easier to like, instead of selling money in your brokerage and then bridging it over to Coinbase, going through all this crap, like you just buy it there. Like I've done that a few times. I know other people who actually closed their Coinbase account. It's like, all I was buying was Bitcoin, Ethereum anyway. Like, let me just buy it here. But going forward, I think that the staking is going to be a huge component for things like Ethereum and Solana. And so I think that those are more investable. But I don't think there needs to be like so many of them. If you look at ETFs, right, like there's like very few like per like big asset class. And I think that's how this ends up playing out.
So I guess one of the things I was curious about, like from a like concern perspective that you expressed is, okay, we saw the Bitcoin treasury company, saw Ethereum, some of the larger caps, but now these are kind of getting into the long tail of assets, if you will. So with that, Bitcoin's still like this liquidity black hole. I think that's where you're going to see the Schelling point, obviously, of just flows, new people coming into space, as you'd mentioned, as well as treasury companies popping up around that. So how do these long tail ecosystems keep up with that? If yes, they still have new people, they'll get a few incremental bids, but if they're always waiting for that next wave of cohorts and people really only are able to raise money when the prices are really high, like, is this kind of like a race to the bottom for the long tail? Or just curious what you think overall happens.
That's an interesting question. I mean, I think Bitcoin is bought for a very specific reason. People believe it's a great store of value, right? It's a hedge against inflation by governments, debt around the world. And no other asset in crypto really has that value prop. So for the other people, like what's their value prop? Like I own Ethereum because I believe that people are going to keep developing cool applications on Ethereum. And if you're one of these long tail people like Athena, you're building an application that settles on Ethereum that people actually use. So you need to actually build products that more and more people want to use. And then more and more people want to hold your token. So it's a different use case than like why people own Bitcoin, in my opinion. And this, whether or not you care about the price going up or down, like if you're building a startup or like a product, you want to see people adopt it. And if you get more people to adopt your product, I think more people will own the token.
Cool. And then when we met back in Paris, you said you're interested in the overlap between crypto and gambling. Do you think there's been much progress there?
I think there's been a lot of progress there. So actually, this was one of the first use cases of crypto. Like stake.com, like now people call it a crypto company. Until like 2 years ago, I don't think anyone called it a crypto company, right? They just happened to accept Bitcoin and ETH from people as deposits. But over the last like 12 months, there's this great website called Tanzanite. There's been over $25 billion of on-chain deposits into gambling platforms. Stake is number one. There's people like Shuffle, Yeet, like with billions of dollars of deposits. And that's real money you can see on chain. So I think that this is actually, after stablecoins, like the second best PMF that we have in crypto right now. And for me, like the thesis is twofold. One, all of the gambling platforms are in customer acquisition wars. I don't know if you guys watch like playoff basketball, but literally there would be 2 or 3 commercials in a row. DraftKings, $50 free bet. FanDuel, $100 free bet. Underdog giving away $1,000 free bets to people. Like that's not sustainable. I think that's an awesome use case for a token. And then also these companies are actually really low gross margin because of transaction processing costs. And so if you build your platform on crypto rails with stablecoins day one, I think you get a massive operating leverage advantage. So we're seeing some people take advantage of this now. I'm really excited about the intersection and I expect it to keep getting better. And that industry has the same problem as crypto. The UX sucks, which is why people are just going from like platform to platform to platform. I think now crypto infrastructure is good enough where somebody can build actually a better UX gambling platform on it and have all the other benefits that I mentioned. Cool.
Well, that's all we have time for today. I want to thank Kelvin for joining this episode. And as a reminder, Newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks, and see you next time.
Thank you guys for having me, and everyone should subscribe to the news feed you guys want, the one crypto feed. That's tremendous.
Plugging my personal side hustle.
I love it, man. Making my job easier.
Thank you. All right, see ya.